The window of opportunity to build your wealth is open right now. But to make the most of it, you'll need to look at assets in a fresh, more insightful way. In this guide, we're going to explore both time-tested assets that continue to generate millions for investors, as well as new, modern alternatives that are helping produce more millionaires than ever before. As you'll discover, balancing your attention between emerging asset classes and core principles is essential for harnessing growth while managing risk in an ever-changing market. I'll walk you through exactly how this strategy works. So, stay with me. Without further delay, let's jump right in. 1. Real estate. Real estate has long been a staple of wealth creation, and for good reason. When you invest in property, you're not just acquiring land or a building. You're securing a tangible asset that appreciates in value over time. This provides a dual opportunity for both consistent rental income and significant long-term growth. What makes real estate truly powerful is its adaptability. Whether you're eyeing residential properties or expansive commercial real estate, the potential for substantial returns is enormous. And while the market might see some fluctuations, real estate has a remarkable ability to recover, making it an essential asset in your portfolio. Let's break it down further. Residential properties, ranging from cozy single-family homes to larger multi-unit buildings, can provide you with a reliable stream of rental income month after month. For those looking to up the ante, commercial real estate might be the answer. Retail spaces, office buildings, and warehouses carry higher volatility, but offer the possibility of incredible returns. Each type of property, residential or commercial, carries its own risk, but there's one certainty. Real estate appreciates. It doesn't stagnate. It grows, offering you a highly valuable asset that you can either hold, leverage, or sell for a significant profit. What's even more intriguing is how you can leverage other people's money. You don't need to drain your savings to get started in real estate. Options like mortgages, private loans, and other forms of financing allow you to stretch your buying power. Of course, with leverage comes risk, so it's important to manage it effectively. A popular strategy for newcomers is house hacking, living in one unit of a multifamily property while renting out the others. This genius approach lets your tenants pay your mortgage while you build equity, reducing your housing expenses and simultaneously growing your wealth. Second, dividend stocks and high-yield ETFs. Looking for an investment strategy that provides consistent returns without the volatility of typical growth stocks? Dividend stocks and high-yield ETFs are your secret weapon. These investments may not offer rapid growth, but they provide a steady income stream and long-term price appreciation, making them perfect for investors seeking wealth accumulation without the emotional roller coaster of the stock market. Companies like Johnson & Johnson or Coca-Cola are examples of dividend heavyweights. These aren't boring businesses. They're financially solid and have a history of paying dividends, even during difficult times. When you invest in these companies, you're not just holding shares, you're setting up a passive income stream that works for you. Over time, that consistent cash flow can add up, especially when reinvested, resulting in impressive wealth-building potential. If you like the idea of steady income but want a more diversified approach, high-yield ETFs are the answer. Funds like Vanguard High Dividend Yield or SPDR S&P Dividend ETFs give you exposure to a broad range of dividend-paying companies, allowing you to spread your risk while still enjoying regular income. These ETFs distribute earnings quarterly, providing you with reliable cash flow while benefiting from the safety that comes with diversification. 3. Precious metals. When economic uncertainty looms, savvy investors often turn to the timeless security of precious metals. Gold and silver are not just glittering commodities. They're considered real money by financial experts like Robert Kiyosaki. Why? Because for centuries, these metals have acted as a safeguard against inflation, currency devaluation, and economic instability. When the markets are unpredictable, gold and silver provide a sense of stability, preserving wealth during turbulent times. Let's dive into what makes gold and silver so unique. Physical assets like coins, bars, and bullion offer the advantage of being tangible. No matter how volatile the stock market or the value of the dollar becomes, Your gold or silver remains steadfast, real, solid, and immune to market swings. Yes, storing physical metals can be a bit of a hassle, but for many investors, that physicality provides the reassurance they need in uncertain times. If you don't want the complexity of storing physical gold or silver, there are simpler alternatives. You can invest in mining companies like Newmont or Barrick Gold, which produce precious metals. As the price of gold and silver rises, so do the profits of these companies, boosting their stock prices. For even easier exposure, consider precious metal ETFs like SPDR Gold Shares or iShares Silver Trust, which give you access to gold and silver without the hassle of storage. 4. Bonds and fixed income assets. Imagine an investment that doesn't experience the wild ups and downs of the stock market but still provides reliable, predictable returns. Sounds like bonds. Bonds are known as the quiet achievers of the investment world. They deliver fixed income that stabilizes a portfolio, making them a go-to choice for investors who want some calm amidst market turbulence. Consider government bonds. These are often seen as the safest option because they're backed by the government's promise to repay its debt. U.S. Treasury bonds, for example, are regarded as risk-free because they're supported by the full faith of the U.S. government. While they might not offer sky-high returns, they provide stability and consistent income, creating a foundation that offsets the volatility of more speculative assets. For those seeking a bit more excitement, corporate bonds might be the right fit. Companies issue these bonds, typically offering higher interest rates to compensate for the increased risk of default. Investing in corporate bonds from well-established firms can add significant returns to your portfolio, as long as you carefully assess the credit ratings of the issuing companies. Municipal bonds are another option. Issued by cities, states, and counties to fund public projects, municipal bonds offer the unique advantage of tax-free interest income, which makes them especially attractive to investors in higher tax brackets. This tax benefit can enhance your returns, making municipal bonds an appealing choice for those looking to maximize their earnings while minimizing their tax burden. 5. Cryptocurrency. Often dubbed the future of money, cryptocurrency is one of the most volatile asset classes today. Yet for those who understand its potential, crypto is more than just an investment. It represents a revolution in how we think about wealth and financial systems. While it's high risk and high reward, for many, that's part of the allure. Let's start with Bitcoin and Ethereum, the two giants of the crypto world. Bitcoin is often seen as a store of value, a hedge against inflation due to its fixed supply, making it a favorite for those concerned about the devaluation of fiat currency. Ethereum, on the other hand, serves as the backbone of decentralized finance, DeFi, and the NFT market. It's not just a currency, it's a platform enabling a whole new digital ecosystem. Bitcoin's scarcity draws investors wary of inflation, while Ethereum's blockchain drives innovation across finance and ownership. For those who are intrigued by crypto but not keen on the wild price swings, stablecoins provide a more stable option. Tether, USDT, and USD Coin, USDC, are pegged to the US dollar, maintaining a consistent value while leveraging blockchain technology. Stablecoins offer the efficiency of digital currencies without the constant price fluctuations, making them an attractive entry point for crypto newcomers. 6. NFTs and digital collectibles. A decade ago, the idea of digital art, virtual items, or even online real estate being real investments might have sounded outlandish. But today, NFTs, non-fungible tokens, are revolutionizing the way we think about ownership in the digital world. Consider digital art and collectibles. NFTs allow creators to sell unique digital artworks directly to collectors, giving them verified ownership of an original digital piece. Think of it as owning an original Van Gogh, but in the form of a digital file with blockchain verification ensuring its authenticity. NFTs aren't limited to art. They're reshaping virtual spaces. Platforms like Decentraland and The Sandbox are using NFTs to sell virtual real estate and assets. In these virtual worlds, owning land is no longer just a gaming perk. It's a legitimate investment. As these digital spaces grow in popularity, so does the value of virtual land and assets, giving investors an entirely new avenue to diversify their portfolios. 7. Crowdfunding for renewable projects. Want to invest in a greener future while making a return on your investment? Crowdfunding platforms like Crowdcube and Start Engine are making it possible for everyday investors to support renewable energy projects. Whether it's solar farms or wind energy, you can invest in green projects for as little as a few $100s, democratizing access to renewable energy and creating an opportunity for financial return. What makes this particularly compelling is the direct impact your investment can have on the environment. Green bonds, renewable energy stocks, and crowdfunding platforms allow you to align your financial goals with your values. And with renewable energy poised to play a central role in future infrastructure, the growth potential is as exciting as the ethical benefits. 8. Domain names and websites. In today's digital world, assets like domain names and websites can be just as profitable and easier to manage than traditional property. A premium domain name or a high-traffic website can generate returns that rival physical real estate investments. Premium domains, for example, are like prized addresses in the digital landscape. Short, memorable domain names are in high demand, and businesses are willing to pay top dollar for them. Platforms like Sedo and GoDaddy Auctions make it easy for investors to buy, sell, and flip domains, with some premium ones fetching prices in the hundreds of thousands, or even millions. Websites also offer income potential. A well-constructed website in a profitable niche can become a steady source of revenue through ads, affiliate marketing, and sponsorships. Once you've developed or acquired an established website, it's like owning a digital gold mine, generating passive income with minimal effort. As we've explored, today's landscape for wealth building is more accessible than ever. Whether you're just starting out or looking to expand your investment portfolio, there's an abundance of opportunities available. Start with some of the assets we've discussed today, and remember that wealth building is a journey that anyone can embark on, if they make thoughtful, informed decisions. We've got another video lined up for you that's packed with insights on building long-term wealth. Be sure to check it out right here on your screen. And if you found this video helpful, don't forget to like, share, and subscribe. Thanks for watching, and I'll see you in the next video.